Market guest then, Deepak Shenoy, founder of CapitalMind.in, now joins in. Deepak, good morning. It's an uncomfortable question that I'm asking for last 2 or 3 days. Is this still a bull market correction, or are we somewhere in the middle of a bit of a near-term bear market?
Good morning, Anuj, and thanks for having me on the show. I think, these questions usually are answered in hindsight because at this point, it looks like a bull market correction if you were very positive on the Indian economy, and it's also quite equally likely to be a bear market move if you're not. But I think the most important thing to understand here is that market volatility is back, and we are going to see a lot more of that volatility, which is why the option prices perhaps have jumped quite a bit of in terms of expectations of volatility going forward. So I believe we are correcting, and if where we are right now is probably not where we're going to be in the next few months, primarily because if it's going to go down, it's going to go down a lot more, and if it's going to come back, it's going to go back and reach near the highs. This may only be a temporary hiatus. I just don't know the direction it'll go.
Okay, well, that's quite a pessimistic view, I'd have to say, Deepak, at this point in time. Are you as uncertain about the banks, or even more uncertain about the banks, considering maybe even this earnings season might not throw up too much in terms of any improvement of gross NPL?
Well, the banking system, to be honest, has been able to hide a lot of the NPLs over a large period of time, and they've had opportunities in the last 3 years. Those opportunities are now gone. The restructuring forbearance that RBI has given them expired in March this year. They are going to have to reduce some of their holdings in SLR, at least the ones that, at least the forbearance that RBI gives them, and the compulsory holdings that they have to do. So some of these elements will change parts of the banking system. RBI is also talking about a benchmark, a universe or India-wide benchmark based base rate for banks. So it may be quite an interesting time for banks, even if the NPLs weren't to fall, that they need to get more efficient. And our banking system has been fat and bloated for a really long time. Banks have not really had to work quite as hard with A, high inflation at one level, and B, a lot of we weren't very afraid of RBI money printing. RBI has printed approximately 15% growth in their balance sheet since 1997. It's only the last 2 years that has paused. Without that implicit support, I think the banking system is due for a rougher time than they have been used to in the last 4 or 5 years. In the immediate future, I believe that defaults and the larger kind will come into fore, and at every few quarters, we will notice that there are issues with terms of capital raising. Banks should be raising capital. They are not. Some of the private banks are, and thank goodness for that. The public sector banks also need to be looking at raising external capital beyond what the government is giving them.
Okay, well, let's talk about some stocks then, Deepak. You like 2 stocks in the broader market, PVR and Bharat Forge. Why do you like these, and what's the story here, and what are your price targets?
Anuj, here's the overall story here is I still feel that the market will be driven by fund flows. So take my picks with a little bit of salt as well. So it's more like don't rush to buy in. It's more like a considered approach. PVR is a stock we're invested in. We like the fact that they are broadening their base from beyond the tier 1, tier 2 towns, tier 2 cities to smaller towns as well. They have acquired one more entity, and then we've had some pretty blockbuster releases this quarter, and I believe that going forward, these 100 crore weekends that films seem to want to have or push themselves to have will only benefit the likes of PVR. Entertainment might propel it to a much higher level from where it is. If it were to continue its performance that we've seen in Q1, we would see a very fairly big year for PVR. We're positive on it. We don't have any price targets. We usually keep trailing stops rather than price targets. So we actually have been in the stock with a trailing stop of approximately 25%. and at this point we like it. Bharat Forge is a story that will have two interesting issues for us, and one of them is the dollar at 66. Being an exporter, that will benefit it. It's a manufacturing entity that is very efficient, so that will, I think, according to me, benefit it as manufacturing improves in general over the long term, and their market isn't necessarily in a decline. In fact, it's done well. And their foray into defense is what is exciting us. This is perhaps a 2-3 year return, but I don't see that happening in the very near term. But their move in defense will actually benefit them in the longer term.
Okay. Well, that's on Bharat Forge. But Deepak, I was looking at one of your other picks, Sterlite Technology. It's more like a quasi-telecom sort of play that you have there. And it's given returns of around 20% on a year-to-date basis, one of the outliers within the mid-cap space. What's your sense on Sterlite Technology?
The interesting thing about Sterlite there is that they are demerging their power and telecom divisions. So the power division takes most of the debt, but is responsible for only about 9% of EBITDA. So they will, when they demerge that, they take the power company private. They will pay current shareholders 22 rupees odd per share. So at 74, 76, you're actually getting the telecom business for 52, 54. Considering an earnings per share that might go up to 3.5 to 4 rupees in the near term, we believe that this is a lower PE stock than its growth will indicate. It makes optic fiber cables, and if Digital India, smart cities, general pervasiveness of the internet growth into smaller towns and more towns happens, Sterlite will definitely benefit from that growth. And it's really a bet on the Indian telecom internet story going forward. And I think that's a bet that we're willing to take, at least at the 15, 16 Ps that Sterlite's quoting at. Okay. The debt will also fall substantially because the debt goes into the power entity, most of it.
Okay. Deepak, pharma stocks have done well. Sun Pharma has bounced back. Torrent Pharma has been doing spectacularly well. Strides has been a bit volatile, but that too has been quite okay. And you like all these three names. At current prices, is the risk reward still favorable?
So I think the risk reward would be favorable in the longer term for a company like Sun, but not exactly at these prices. I would still suggest a valuation that should be entered in over time rather than just as a one-shot entry today. But we are doing precisely that. We're looking at the stock in the longer term. We've been invested in it for a while. The merger will have its benefits over a 2-3 year period, and that's when we believe that will change. And the same applies to Strides, which has a merger with Shasan, and then that will give it a little bit more in terms of vertical integration. They play in slightly different markets. We're talking about margins being lower for Shasan, but it gives a wider footprint. That will change the game. Torrent again has done really well in the first quarter. The results were just spectacular. We don't expect that to be repeated because they had a small period of quasi-exclusivity, if you may, on a certain drug. But we believe that these three companies will benefit, apart from most of the pharma pack by itself, by the dollar at 66. And they will also benefit from the fact that the FDA is starting to open up and allow more. They're not as worried, at least, about most of the Indian facilities. And I think over time, as these facilities come into FDA approvals and more drugs get FDA approved, that these companies will benefit.
Okay, fair enough.